Good morning, everyone. Good afternoon for those on the East. Welcome to another Frontline Systems Lunch and Learn session. Today we're going to discuss some things on year-end. There are three topics here: are whether or not to consolidate, requirements for year-end, and should I or shouldn't I. Those will be the points that we're going to make today. My name is Steve Erickson. I am your host and trainer. The question of year-end comes in a lot of areas. We have the subledgers, receivables, payables, payroll, those type of things which have some idea of a year-end. And then we have the general ledger along with our fiscal calendar. So a couple things to understand. First off, as we come into a year-end or the creation of a new year, as it's really structural in Sage 300 in the ACPAC product, we don't really close the year as we open the new year, and we'll explain that a little bit as we go on. But the first thing as you come into saying, we're getting close to the end of the year, there's some things that I'm going to want to do here at the end of the year. The first of those is we have to go look at the fiscal calendar. So when we come over to the fiscal calendar, it's in your common services area, and we open up the fiscal calendar and we say to ourselves, I need to open a new year. Now you are going to need to do this ahead of the year end. And the reason is the fiscal calendar controls all dating. So if I am entering an invoice in the first week of December that has a due date in the first week of January, I will not be allowed to put the January due date in that transaction unless I have already opened those in the calendar. So the calendar becomes the first point of contact as we start the march to year end and the new year that is to follow. We must come in sometime around the end of November, first part of December, when those dates on our transactions start to move into the new year, whether that is a terms code on an order entry document that is allowing someone 60-day terms, then you must open in November to allow those terms to post through. Or if it's an accounts payable and we get 30 days, then you must open sometime in December to allow those 30-day terms to be posted into the system. So the calendar is not attached just to general ledger. It is attached to all modules and controls the ability to put dates in all areas of the system. Therefore, it's the first place that we come in. Now, to create a new year, you will come in. Now, I'm presently logged in the year 2020, which is where my sample data is at. You can see that the year 2021 is already here, but we're going to go ahead and create 2022 so that you can see that happening. So you open up your fiscal year. It's going to hopefully give you the current year of 2014, if that's the year that you are presently running. If you're on a calendar year ending 12/31, you would more likely be in your 2014 fiscal year. You're simply going to come here and hit the New button. It's going to open the new fiscal year, and you hit Add. And that's all there is to it. Assuming that the dates that you want did not change, it is going to create a new year based on the prior year and fill that out. Now, if you are running some type of staggered year or a 13-period retail year, then you will have to come back in more than likely and edit the start and end dates so that they match, particularly in that 13-month retail calendar. Because it runs on exact weeks, the days move a little bit. So you can do that after you hit the change. You can come in here anywhere and edit these dates and then just resave the calendar. So that's the first step. That's the first requirement that must be done to start the march into the new year. Now the rest, there's only one other requirement to the system, and that is you create the new year in the general ledger. That's the only other required activity, and we'll get into that a little bit later. I don't want to do it right now. So we'll move on to the next point that we have on our list of points, and that is the should I or shouldn't I. because there's a lot of questions that we can do here as we come into end of year. Seems to be a logical time to do some data management, and so it comes into the should I or shouldn't I. So let's give an example. So if we go into accounts payable and we start to look at the should I or shouldn't I, we can go to periodic processing, and we have a variety of things here: clear history, year end, delete inactive customers, clear statistics. All of these are in the should I or shouldn't I basis. Let's go look at year end. So in year end, it says, oh, I'm going to reset all my batch numbers. I'm going to clear my reoccurring payable statistics year to date. I'm going to clear my activity statistics. Now the statistics are over in the accounts payable vendor summaries. You can see those statistics. Of course, the reset batch numbers is part of your batch process. Here's the problem. If I reset the batch numbers to 1, I have to purge the batch history. So if I want to retain the batch history of last year, I can't reset the numbers because they'll go back to 1. Okay? So it is our opinion, and the system supports this, that you don't need to reset batch numbers at all, ever. They will simply grow in size, but they will be there then year over year over year. If you want to go back and look at a batch and what was in that transaction from January of 13, that batch activity can still be there if you want it to be. So there's the first should or shouldn't I. We recommend that you don't because there's no structural advantage in doing it. When we come and look at the next year-end function, it's the clear reoccurring payables year-to-date statistics. Okay, so that's over here on the vendor activity, and we can come in and look at the vendor activity here. And if I look at a vendor, I can see their information here, their outstanding balances, prepayments, last invoice, open payables, last invoice date, and I can see their aging, transactions, and payments. Now, this doesn't affect the details. It only affects the statistics. So it only affects year-to-date activity that we might see on a vendor. So you can come back and ask yourself, do I really want to reset that or not? If you do, great. Give it a check, process it. Can't do a lot of harm because all you're removing is a year-to-date statistic. Here's the caveat. Everything has a caveat. The year-to-date statistics is a linear line. It starts when it starts, and it ends when you reset it. So if you are going to make this truly a year-to-date activity, you need to set it at the end of the day on 12/31. If you do it early, you're going to pick up some of late December in your next year transactions. If you do it late, then the year-to-date will be short that first week in January because you forgot to do it. So if you're going to do this, back up the database because you may not like it, and then process it, but it needs to be processed as close to the end of your year as reasonably possible. Okay? And that's the same thing with the clear activity statistics, which is what we just looked at. Highest paid invoice, date of last payment, those type of things. And then do I want to clear the invoices paid to date counter? So these are just statistical tracking, and do I want to purge them? I'm going to leave that to you, but I am going to advise you again that they need to be done as close to 12/31 as reasonably possible, and you need to have a backup of the database before you start because you may not like what it just did. Okay, so those are the key points. You have the same thing over on the receivable side, and similar things in other modules, but most of the statistics are in your receivables payables activity and come into the real should I or shouldn't I activity in there. So let's go look at a couple of other should I or shouldn't I. So when we go back to this accounts payable periodic processing, I now come into a variety of clear. Should I clear history? Okay, I can open this up. I can pick a variety of different history, fully paid documents, vendor comments, 1099 activity, printed posting journals, etc. I have to tell you, I don't recommend that this necessarily happen at a year's end. I think you have a lot of things to worry about when you're coming into a year end. You've got, everything from invoices. Do they go in this year? Do we hold them till next year? You've got dating issues, terms issues, cash issues, general ledger tie-off issues, and that doesn't even include trying to find time to get to the mall to shop for Christmas, make food, invite guests, and all the personal things that we do around the holiday time. If you want to purge history, this can happen at any time. This can happen in January, in February, and we can set the dates to purge to 12/31 if that's what you want to do. So my recommendation is, as part of your year end, this is a should not, because you have too many other things to do. And these can take a while. We have some databases in our system that if we tried to purge all the fully paid transactions back to, say, 24 months or 36 months, it might run 12 or 14 hours to get rid of that data if it hasn't been done before. So this is not something you want to do lightly. This is not something you want to just go, hey, let's purge out some data and click the button and go. This is a planned event, and we ask that you plan it, and if you wish, engage us to help you plan it. And we can do some testing to see just how big of impact this is going to have on performance. It might even have to be run on the weekend if it's big enough. So this is a should not. And this is true across most of the system. I believe it's a should not. So we are going to come through and leave that go through. Now, deactivate inactive records. This, again, is a should not for year end. These are things, again, that can be planned, they can be tested, and they can be implemented at any time during the year. Clear statistics, another should I or shouldn't I. This, though, is more reasonable. If you really want your statistical tracking to be on the money, then this is something that you should look at doing. So do I want to purge it? What group of clients do I want to purge it for? And then what periods through do I want to purge those statistics? Now, the system keeps statistics on a period by year basis. So it keeps multiple years. So you're not doing anything that has to happen on 12/31, but it's a summary field, so it's a relatively easy field to do. If you really, really wanted to, this is something you could incorporate into year end, but again, it's also something that can be done later. Okay, and the rest are just functional activity. They're not part of our year end. So we come through here. What has to be done in accounts receivable or accounts payable for year end? And the answer is nothing. You don't have to do anything to prep. They are date-driven applications. They are holding their transactions by date and then assigning fiscal year, fiscal period activity, January, February, March activity to them based on their date. So there's only one optional that I recommend, that if you want to do it, that you actually do it in the year end, and that's under the year end function, and that's clear your reoccurring payable statistics and clear your activity statistics. And if you want to reset your invoices paid and days to pay counter, this gives you your average days to pay. You can reset that as well. Those are the only three things you should think about for year end. Everything else you should leave for another project on another day. Okay? So that's the should I or shouldn't I function. And we're going to go in and look at that a little more. So that was payables that we looked at. We're going to come down here and look at receivables, and it's much the same thing. If I come into the periodic processing, I have clear history, clear statistics, and year end. Same thing we saw over on payables. So I can reset the batch numbers, which we determined on payables we don't want to do. I can clear activity statistics. I can clear reoccurring charges statistics. And I can clear invoices paid and days to pay counter. Now, if you clear this, you will have no days to pay tracking on customers. That might be acceptable to you, it might not. Right? Do you use that days to pay a lot? If so, you may not want to purge it because it's going to start over and start the calculation over again. Okay? Some things to think about there. The reoccurring statistic stuff, if you're using reoccurring charges, you can reset that so that it starts over again. You can clear the activity statistics, highest paid, days, date of last payment, date of last invoice. Those aren't terribly important because they're going to get updated the next time something happens. The next time they post a payment, that day's date of last payment is going to change anyhow. So clearing it, who cares? Your highest paid invoice amount will get reset. So if it was January of 2014, that'll go away, and you won't know it was January of 2014, and you'll see what the highest balance in their account was for the new fiscal year, not taking into account anything in the past. So you may or may not want to do that here because you're really looking at customer activity, which we tend to analyze a little deeper than vendor activity. You still have your you still have your clear history functions here, and again, just like in payables, we don't recommend that you incorporate this into the year-end. This is a should not, and that you do this as an overall strategy of purging and maintaining historical data, something that we can help you formulate and do the testing necessary so we know how much overhead that takes when it does come time to purge that. And part of that is going to be just on what is the overall size of your database. If you are approaching the 60, 70, 80, 100 gigabyte size, okay, it's time. We need to start talking about strategies. How much data do we need to hold? What is the relevance of holding that data? If you're down in the 5, 6, 7 gigabyte range, and you're growing at a snail's pace as far as new transactions going into the system with all of that history being held, we can hold it a while and decide later what is relevant and what isn't. And there may be other reasons to purge. If you're advised by your accounting or legal support that data should be held only for a certain amount of time, then we can build a strategy with you to do that. But we would typically do that as a separate project from our year end. So we're going to leave the high activity of purging data in a should not functionality. If you're using inventory control and order entry, you really have a lot less to do here. Periodic processing, you do have some clear history, which again we're going to say the same thing, leave that for later. You've got process adjustments and other things that come into your counts, but not really part of your year close, right? You've got your physical inventory processing, which we're not going to go into in detail here, that you will be doing, but typically we're not doing that right at 12/31, right at part of the year close. More and more and more we're seeing that happen a month before the close or a month after the close, especially if you have to bring auditors on site. The more flexible you can be with this, the better, and there's no reason it has to happen with the 12/31 fiscal year close activity. Same in order entry. There's not a lot of activity in order entry. You've got statistics and inquiries here that you can look at, but there's just not a lot of purging activity here. You've got your clear history, but again, not something that we really want to do as part of our year end, and it is not required of us to do as part of our year end. And then the last is U.S. payroll. Here we don't recommend doing anything at all. It will handle its quarter and year transitions all by itself, and if you want to come in and remove old employees and remove their pay activity, we again recommend that that is done strategically at a different time than the activities of the year end. So all of these modules have some purging capabilities, have some history purge capabilities. You can dump posting journals and a variety of other things. but we don't want you to do it as part of a year close. We want to have a strategic conversation with you so that you are making sure you're not dumping data that you need, that you're not dumping data that is useful, or that you're not dumping data that we have reports set against for whatever particular reason. A good example of that is the posting journals and order entry. If we have written sales reports for you out of order entry, the lion's share of those are written against the posting journals of order entry. If we purge those posting journals, we lose the ability for those reports to function. So these are strategic things that we need to talk about and not things that we want to roll into our year close function because there's just simply no reason for it. These modules will make their transition nicely without it. So that leaves us one place and one place only, and this is where the bulk of the work happens, and that's in the general ledger. So let's take a look at the general ledger. What should I do? Well, first off, you should post everything that has come down from the activities of the subledgers. So as you come down here, you want to make sure that you post any outstanding batches that are in the system so that all of the activity for the current year is applied and in the system. Now note that if you're closing this after January 1 and you're posting transactions into a subledger or processing sales and order entry in that first week of January, you will be feeding batches or transactions in batches to the general ledger that are in the new fiscal year. And when you post that batch, it will spit those transactions out into an errors batch. And the reason is we haven't opened the year in General Ledger yet. General Ledger is not capable of taking transactions for the next fiscal year yet because we have chosen to delay that. And we can delay that as long as we want to. And those batches will simply accumulate in the General Ledger, being unable to post through because the General Ledger is not open and ready to accept those transactions. And that's okay. That's an okay process to be in. So we want to go through and either do them in bulk like this, flip them all to yes, and then come in and do the post. Or you can post them individually here on a one-off basis as you review them. Whichever way you choose to post down, you want to make sure that everything is posted that you want posted in the current fiscal year. You can then begin to run trial balances, you can do adjustments, you can do anything that you want to do in the general ledger. And when you're done and you feel that the general ledger is ready to begin to take transactions for the next fiscal year, you can first come in and lock the calendar if you want. But what I suggest that you do is come into the periodic processing, come into the create new year. Now notice this did not say close the year. This said create new year. This is an important distinction to note. There is no close function in Sage 300. There is only an open function. And that is a function that allows us to come in and notice that it says I'm going to create new records for the 2021 year, but I'm going to remove all records for the 2018 year. Why is it going to do that? Okay, here's one of our reviews. If we go into the setup of the system and we go to the options screen, under posting, you have down here how much history you want to hold in the general ledger. So you can keep 3 years of fiscal sets or 3 years of fiscal detail the way this is set. So fiscal detail is every line item of every transaction that came into the system. So here we come into our question, should I consolidate or shouldn't I? How many years of detailed general ledger do I want available to me? Do I want just the current year? Do I want 3 years? Do I want 5 years? So depending upon which version of Sage 300 you have, what used to be called under the ACPEC days 100, 200, or 500, now standard, advanced, and premium, depending upon which version will depend upon how much of this you're allowed to do. So, you know, in standard, I think it's 3 years. In advanced, it's 5, and in premium, it's 99. So we can set this to say I want 5 years of full detail, and I want 99 years total. So the last 94 years in summary net changes. I don't need detail anymore. Okay, and if I make this change to the system, I have to close.
Hey, Steve, you got that backwards.
You're right, I did. I posted it backwards. So let me make that change here in a second. All right, as noted, it's 99 years of total sets, 5 years in detail.
This was Fred who said that.
Yeah. So as we come through and we save that now, it says I can't, and it says I can't because other people are in the system. Okay, so if other people are in the system, I have to come through. Now, other people aren't in the system. I'm in the system. But you have to come through and get everybody out to be able to save this activity. So now we're going to come back, make this change again, 99 years, 5 years of full detail, and we're going to hit the save button. We didn't get any protests from it, so we're going to go ahead and close. So now we're going to come back over to this periodic process, open the new year. Now it says that I'm going to come in and create my 2021 year. I'm going to remove all fiscal sets back to 1922, and I am going to push the detail to summary from 2016 forward. So I'm going to keep detail back to 2016. I'm going to keep summary net changes down back to 1922, and I'm going to purge everything else that's in the system. Okay, so you can adjust that wherever necessary. When you're done, when you're ready with this, you hit proceed, and the system goes. Now, before you hit proceed, back up, because there's no recovery from this. So you want to back up of the database, hit proceed. It is going to march through just like it does here. And what it's doing is it is summarizing. It's in essence doing what you think of as a close. It is summarizing the P&L activity from periods 1 through 13 if you're using 13 periods. And it is posting the clearing activity to bring our P&L to 0 in the 15 period of that active fiscal year. It is then taking the balances from the balance sheet activity and posting them to the starting balances for the next fiscal year. So if you look at the database, there is a starting number at the beginning of each fiscal year, and then there is a change number or transactional activity through the year. And your balances year to date are mathematically calculated from the starting balance going forward until the next starting balance is reset. So there is never a close balance in any period or any year of the system. The system holds starting balances and then does the math to calculate where it's at from there. Okay, so we have gotten a message. We've posted our sequence 55, which is the post to the 15 fiscal year or fiscal period. To clear it, we've created our new year 2021, and we've removed 0 transactional activity. So now we can come in, and where we had those transactions stacking up because we were doing them in the new fiscal year, we can now come through and begin to post those, and they will post into the new fiscal year. Note, this is our closing entries batch. So it's a batch of transactions that came through, and you can actually open it and take a look at it. It's fully posted. It's closing entry. It's closing sales up to retained earnings. This is closing sales for Department 100 to retained earnings, and so on and so forth. So every transaction is through here. Notice it's going to the closing period, the CLS period, which is really 15 out of the buckets. And you can do that. Now that I've closed the year, though, very interesting. If I open a new fiscal year, I can still post to the 2020 date, and I now have the option of posting to what's called an ADJ period. because I've opened 2021. That's my new current year. Now that I've opened that, period 14 in the stack becomes available to me, and that is called the adjustments period. So the adjustments period are, we've now got the auditing report back from the accountant, or the changes that the accountant wants you to make to tie off depreciations or tax implications or whatever they are. These are transactions typically that are dictated to us by some outside entity, and they are to bring our year activity in alignment with taxation through depreciation or accelerated 179s or whatever. So typically the accountant will send you a list of transactions that need to happen, and you have the ability to put them in the ADJ period. Why? Well, if I'm going to take a $20,000 depreciation write-down on a building, do I really want to stick that in December? It's going to make December look bad, because it might even pull December into a loss if I'm posting that much depreciation into a single period. So rather than make period 12 look really bad, what we can do is put it in 14. It affects the year-to-date numbers, but it doesn't affect any given period 1 through 12. So now when I do budget to actuals or sales to profitability or operational-based reporting, December will look like December looks, and depreciations will come in after the fact. Because depreciations, as we know, aren't necessarily relevant of whether or not we made money in a given period. They are more relevant for the taxing activity. So here you have the ability to move those transactions into a period all their own called ADJ and have them appear on your financial statements, all rolled into the depreciation expenses. But if you are doing month-to-month comparisons over the next fiscal year, and you're doing January last year to January this year comparatively, they will all be real. They will be what January did. Operating expenses, revenues, payroll will all be real. And when you come down and look at the profit of January a year ago to January this year and do a comparative, they will be real, as will December. So no more do we have to whack December with auditing adjustments. Use the ADJ. It's a great source coming in there. The last thing that we want to go over is the ability to actually compress a given account. So you have a function in here called Consolidate Posted Transactions. And you can, in any given transactional list, decide that you want to consolidate transactions in specific accounts. So the only thing I want to go do is I want to go do payroll. See if I can find something regarding payroll here. All right, so let's just grab employer FICA as part of our payroll stack. I can come through and identify that I want to consolidate all the transactions for this account. And I can consolidate them by account fiscal period, and source ledger, or account fiscal period, source code or source ledger. And then I can give it its own code to come in here, and I can say process. And what it will do is it will squeeze all the transactions for this account. So if I go look at this account, 2230, and I go look at the transactions in there, they're now not in detail anymore. They're consolidated by period, because that's the way I chose to consolidate them. So I only have one net number. going through. So this is interesting and sometimes necessary depending upon who's working in your general ledger. We see different people doing this at the payroll level, so that you can't see John Smith's payroll is X and Sally Johnson is Y. They are just compressed into big numbers. So this may be something that you want to use for that purposes. This can be done again at any time. And if you're going to do it, you might want to do it every quarter. You might want to squeeze it. You might want to squeeze it every month, depending upon your role. But you can do it for those specific accounts. You can also, in the master record of any given account, you can identify, does this account post in detail or does it post in a consolidated form? So again, coming back to those payroll accounts, you may want to just decide that payroll is going to post in a consolidated form and not in a detail form, so that you can maintain that as well. Okay, so with that, we looked at what is required for a year close and found that there wasn't a lot. Open the calendar in the new year and open the fiscal year in the general ledger. We talked about the should I or shouldn't I, mainly purging of history. Most of it we said you shouldn't. You should wait and do them as separate projects. And then we reviewed consolidation, both at the inbound level, the function of consolidation, and at the account level where you can force one to consolidate in total.
Steve, this is Fred. Is it all right if I make a couple of comments?
Yep, please do, Fred.
Thank you. First of all, in terms of consolidation of accounts, even though there are many good reasons to do that, one thing you have to keep in mind is if you want to use an account to drill down back to a subledger, that once you consolidate, you lose that.
Yeah, Fred's absolutely correct. If you consolidate a particular account and then want to drill back into it to see the detailed transactions and jump to the subledger that made that transaction, you lose that functionality in that account as soon as you consolidate it.
The only other thing I had, which is Fred, is if you do want to clear your statistics for customers or vendors, those a lot of those on an individual vendor or customer level are set at a this year, last year calculation. So if you pulled up a vendor and you looked at the statistics, you'd see a this year, last year measure for things like largest invoices, days to pay counters, and all that. So if you don't clear, then that this year, last year really stops having any meaning. If you do clear, it clears the this year counter. It doesn't clear the last. It actually moves this year to last year. So you're not getting rid of it altogether. You're just restarting it for a new year. Keeps last year.
Yeah, good detail, Fred, on that. And it is still important that you do that very timely at the end of the year so that that year is a relevant year and not some arbitrary. It is still a linear line as described, but Fred's correct. It does move the current into history when you process it and clears the current.
But on a grand scale, it may not matter at all because a lot of people that I work with, they don't even bother with that. They don't look at it. So it doesn't really matter whether you do it or not, as you mentioned.
Well, and part of that, yeah, exactly. It doesn't matter. It's not required is the key point here. So it's whether or not it's important to you, the user.
Correct.
And the other point to make is if you're running CRM, that is where CRM is getting its statistics from. So if that information is important to you on a customer statistics tab within CRM, then you need to make sure that you do this inside of the application the correct way on a timely basis, because that is where CRM is getting its data from. Okay. Any other questions, comments, or thoughts? Yes.
Chris at Machine and Process Design. I have a question.
Sure.
Any purging or consolidating in accounts payable, does that have any effect on purchase orders?
No. No, so your purchase orders will purge separately from the way the POs will. and it is looking at like costing is looking at different buckets than the statistics. So if you're going to clear those statistics buckets out of accounts payable, it will not have an effect on purchase orders.
Okay, good. Okay, thanks.
Thank you all very much for attending another Frontline Systems Lunch and Learn on year end with should I or shouldn't I information. It's been a pleasure serving you here, and I hope this was valuable. Give us an email back and tell us what you think and subjects that you would like to see coming forward as we are planning our 2015 calendar of Lunch and Learns. Thank you, everyone. Have a great day.